Good afternoon, everyone. Campbell McCreary here, Amvest Capital in New York City. Welcome to the Amvest Capital Link Live webinar with Foran Mining. Foran trades on the venture as FOR and as FMCXF on the OTCQX in the United States. Hope you enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of GoToWebinar, or just email them in and we'll ask the questions in real time or after the webinar if we still haven't gotten to your questions. Amvest, of course, is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please note this important disclaimer and read it carefully. This call is for informational purposes only. We're pleased to have with us today Dan Myerson, who is the executive chairman and CEO of the company. So Dan, I'm going to make you presenter. Yes, he was actually previously head of Glencore's Canadian zinc business and has a vast global experience in the metals and mining sector, including refined metals and concentrates, trading, mining, smelting operations, and capital markets. And my apologies, it's FOM, not FOR, for their Canadian tickers. So Dan, if you want to share your webcam, and I see your screen well, and we'll dive in.
Okay. Is that showing correctly now?
Yes, perfect.
Okay, cool. Now I've just got to adjust one thing. Sorry. No, that's not working. Sorry, 1 second. I'm just trying to move this out of the.
You can just grab it on the side, pull it over.
Yeah. Okay, so done that now. All right. Thanks very much, Cam. All right. So how should we do this? Shall I start with just giving a bit of an overview presentation, and then we can do some Q&A with yourselves and the audience?
Yeah. So you have about up to 20 minutes to tell your story.
Okay. Fantastic. All right, guys. So let's get into it. So zero carbon copper in Canada, in Saskatchewan. That's what we are doing here. Before I get into the zero carbon approach and how we do that and why we do it, I think it's worth just giving everyone a bit of an overview on the company, on who's involved and the project and all of that. So I recently joined Foran. I joined them from Glencore, as you said in the introduction. I was previously running Glencore's Canadian business on the trading and on the asset side of the business. And it was in 2015 that I actually came across Foran. I remember it very clearly because it was when they discovered Big Stone, one of their second sort of major deposits. And the discovery hole was around 100 meters at 2% copper, 3 grams per ton gold, and there was a patch of 27% zinc. And I remember because I was like, wow, this is a great find, and I knew the district and knew what else they had. And I went and looked deeper, and I saw Pierre Lassonde was a key owner, Darren Morecambe as well. So I arranged a meeting with them, and I said, guys, congratulations. You must be so happy. You've just made probably one of the best copper finds. And they said to me, look, we're actually devastated because the market doesn't care. And I said, what do you mean? And they said, well, look, our shares are just going to get sold off if we put out more good news, because it's 2015, let's remember here, guys. So people weren't interested in commodities, let's say, for the last decade, but especially in 2015. And it was very interesting because they explained to me, to create value in a mining company, you need three things. Number one, you need a low cost, long life asset, which they clearly had. And I was like, okay, but you guys have got that. I mean, their all-in cost is 44 cents per pound. So that's their break even per pound of copper. And it's clearly long life. So I said, okay, next. And then they said, well, you need to start in the right pricing environment. And that was a big light bulb moment for me, because when you get these mines going, it's very important that you are allocating your capital efficiently and utilizing your equity efficiently, because that's how you finance your whole business. And when you're going to be issuing paper and putting out your results, and the market just doesn't care, it's complete waste. So to their credit, they focused on doing a lot of the more boring work, the unsexy work, like the baseline environmental studies, the geotechnical, all that stuff in the background, to get the project ready to go at the right time, which is now. And that's something that's always stuck with me, and something that we obviously try and implement as we sort of run the company with a clear focus here of maximizing value per share for all shareholders, for all stakeholders, and further for society now, with our approaches on the environmental side, which I'll detail in a minute. And look, the third was to have a credible, capable management team, and one that's properly aligned with other investors. And that's something that we've made a big effort in doing, and how we've built up the whole management team. Compensation is very much linked to the performance of the company. I don't take a salary in any cash, it's solely equity. And it's again, it's done because it's important that we are all aligned and in this together. Now I'll detail the project in greater detail, but just on other key people involved. We recently did an investment with Fairfax and Prem Watsa. So Prem Watsa, the Warren Buffett of Canada, doesn't typically play in the mining sector, but very much liked our sort of philosophy, liked the project and our vision. So we did a deal with him and his company, and so it's worked out fantastically. So we're very happy to have them on board. And yeah, on a fully diluted basis, they're about 25% owner. So it's nice to have a strong sort of cornerstone investor like them, and one who's there for the long term, which again helps you time your register. And there's a whole host of other synergies to be had there. So we're very grateful and very happy. Now just back to the zero carbon approach, and I just wanted to take a bit of a moment to discuss this and explain why we do what we do here. Now it's very much a business decision in how we structure the company to be carbon neutral and eventually carbon negative. Now, why we do that is because there is a cost of carbon in this world, and it can either come in the form of carbon taxes, which you have in Canada, where we are, or cap and trade system in other markets. But ultimately, the world will pay for it, as we're seeing with forest fires and all other things. So for us, we wanted to get ahead of that. Now you can see on the chart below here that come 2030, the price of carbon taxes in Canada is forecast to be $170 per ton. Now we obviously want to do everything we can to not pay those carbon taxes, and eventually actually go carbon negative, so we have carbon credited, so you have carbon credits. So that's why we've sort of that's what's really inspired our thinking and how we've gone about it. Now we're also very lucky because we've got hydropower just down the road from us at Pelican Arrows. Our carbon intensity of our copper is extremely low because we could do the first 3 years of our mine open pit. However, we're doing it all underground. It makes more economic sense to do that, as well as makes more carbon intensity sense to do that. So that's sort of why we do all of this. Now, how we do this is really another thing, which again, probably 5 years ago you wouldn't be able to do, but today, the battery electric vehicles and trucks and electric equipment has come such a long way that you can use that. And why you use that is because not to be sexy and not to reduce carbon, but because it's more productive and your unit costs drop lower, so you get more efficiency. So again, it all comes back to it's what optimizes your economics the best. So that's why we do the whole zero carbon approach and how we're doing it. We've since taken it a step further. We're looking into creative solutions, like instead of using concrete, we use hempcrete. Hemp is actually sequesters 4 times more carbon than a rainforest, so it's very beneficial from that sense. We're looking at building carbon sinks on our property, which will be another way to suck more carbon. And all these things are in the hope of eventually going carbon negative, as we said. So I just wanted to give everyone a little bit of background on that sense. Where we are located, so we're just over the border from Manitoba in Saskatchewan, in the Hanson Lake district. Excuse me. Now, and it's along the Flin Flon Greenstone Belt, prolific belt, as I'm sure everyone is aware. But the Saskatchewan area and Hanson Lake district largely untouched. So we're very lucky in that sense, because we're sort of going to be the ones to really highlight all the value and start bringing it to the world. But it's fantastic. We've actually staked additional ground just because of the success that we've had on the drill bit, and yeah, we've got a regional plan which will be happening now until throughout the next sort of 18 to 24 months while we're building McIlvenna Bay. On this chart, guys, what we're showing is on the x-axis here, you can see all of these names here are names of mines that have been in production along the Flin Flon Greenstone Belt. Now, the orange part of the bar is the resource, the size of the resource at time of production commencement. The blue part is how much resource has grown once in production. Now, you can see that the blue part is pretty much bigger than the orange part of the bar in every single one here. Now, that's not surprising, because almost all of these mines here have been underground mines. So you're never going to drill all the way down when you're drilling from surface to define the overall size of your resource, because it's difficult drilling, number one, and number two, it's expensive drilling, so it's not an efficient allocation of capital. But what is clear here is that these things typically do grow. Now, McIlvenna Bay, as you can see, is already the second largest. It's open, up dip, down dip, along strike. We don't know how big this thing will be, but if it follows historical stats and doubles at a minimum, you're looking at a 55-year life of mine just from McIlvenna Bay, and that's exciting. However, what's more exciting for us is the rest of the camp, because we are trying to really build a scalable camp here with our centralized processing mill, and that's why we're so excited about the regional program with Big Stone, with Ampere, with Faraday, with Thunder, with all of our other targets and deposits. So that's what we look forward to demonstrating over the next sort of 18 to 24 months. VMS deposits, I'm not going to talk to you guys too much about this, because I'm sure you all understand them well enough. The key thing for us, guys, really is, it's all about risk, and what the VMS system and the cluster system enables us to do is we can start with a small cluster first, for not a huge amount of capex, and get that into production, and then use those cash flows to start your next one and your next one, all by which you're maximizing value per share and not having to take on ridiculous amounts of debt and not having to issue ridiculous amounts of equity, thereby preserving value and maximizing it for your shareholders. And that's one of the things, as I spoke about earlier, is so important to us. The metallurgy, not going to talk too much time here, guys. Essentially, we produce two products. One is a copper, gold, silver concentrate, and one is a very clean zinc concentrate. Very straightforward, very simple system. So here, guys, I think this is worth talking about. Now, what I'm going to do is do a quick, just a rough NPV calculation for you on the project and how we think about things. Now, excuse me. So it's that a few things to note. So the company did a PFS prior to my joining. We are now putting out a BFS in Q4 of this year. Now, there are going to be significant changes in the PFS. From the PFS, we've optimized the project significantly. The project's grown significantly. With all the drilling that we've done this year, we're going to be releasing an updated resource in about a month's time. So your reserve life will grow as well as your resource will grow. Now, and I'll get to that. I'll get back to that in a second. But yeah, and you've optimized the costs, the terms, all of that. So your NSR has improved dramatically. So let's do a very conservative NPV calculation. And if we use copper prices of, well, let's use $4 copper, zinc of 120, gold of 1800, and silver of 25. Okay, so near today, or silver 20. So near today's prices, but a bit lower. Now at those prices, your NSR is roughly $315 per ton Canadian. Okay. So, and that's the way we think about it, because we have sort of 4 metals. We mine basis NSR because that's the true economic value of the ore. So if we say $315 per ton, take away our operating cost of, you can see there, 99.34. Let's just call it 100. That's $215 per ton. Okay. Now our throughput. Our initial throughput will be 4,200 tons per day, which is 1.55 million tons per annum. So we say 215 times 1.55 million, and that's 333 million. Okay, so that's your EBITDA per annum, and that's pretty good. Okay, so we're making $333 million per year. Now our reserve life is going to grow considerably this year. I don't know if it's going to be sort of, let's just pick a number of, say, 15 years, which is quite conservative. The current resources today is 25 years, so we think we'll at least define a few more years. So let's call it 15 years to be conservative. So we say 333 million per annum times 15 years is just under 5 billion. Okay, that's our future value cash flows. So now let's discount that back. Discount rate of 8%, 15 years, quickly divide by 2, and we're at 2.5 billion. And let's take away our development capex now. So let's assume that the number goes up from the PFS from 260 to 300 or 325. So let's use 325 to be conservative, and that's 2.175 billion. So that's your NPV of McIlvenna Bay. Okay, now the way we think about it is, and the business model, how we run it, is that we've got to just continually de-risk the project so that we move from trading at a 0.2 times NAV to 0.3 times to 0.5 times to eventually 0.7 times. And what to do there is, you know, to bring in the right owners team to partner with you on the build, to release the BFS, to upgrade the resource, to do all these things, and all these de-risking events. By doing that, we hope to move the valuation more appropriately. What's more exciting for us is on the regional exploration, is to start demonstrating the value of the region and how the second deposit will then come in and will be supplementary to McIlvenna Bay, and you'll increase your scale of production from there, and obviously scale up your economics, and that's the next sort of phase. Again, market cycles and just how developers will typically outperform producers in the right environment and with the right approach to risk. You guys know this, so I'm not going to spend too much time here. Yeah, and just in terms of upcoming catalysts, I touched on this, but just to recap, you know, we've got the near mine expansion as well as the regional exploration drilling that's happening now. So we'll start releasing results fairly soon. We've got Big Stone drilling as well, so we'll start releasing results there in about probably 2 months or so. We've got an updated resource report coming in a month or so. We've got the BFS coming in Q4 as well. And then we've got additional permitting milestones happening later this year, early next year. And yeah, guys, in closing, this is Foran. I guess I'll open it up to some Q&A now.
Okay, thank you. Good job. Good questions. Thank you for sending them in and continue to send them. But let's start with this. Are you scrubbing your emissions of pollutants?
Sorry?
Are you scrubbing your emissions of pollutants? Are you using a scrubber?
A scrubber in our processing facility?
Yes.
No, we don't. It's fully enclosed though. Everything is fully enclosed. So it's not the same as a smelter where you would have a gas scrubber in that sense. But everything we'll have is fully enclosed, so it's all captured in the system.
Does hempcrete sequester carbon when used underground?
That is a very good question, and I actually don't know the answer to that. But I assume so. However, I don't. I will reconfirm that for you. Above ground, definitely.
Can you specify your carbon sinks?
Not yet. We currently have a feasibility study underway for that project specifically. So we'll be able to release that within a few months on that.
How much dilution of the ore are you expecting?
15%. We hope to achieve better than that, but we like to be ultra conservative. So we've done significant geotechnical work on that, just because underground mining, dilution is one of the biggest sort of killers. So we try to be very, very conservative and take a very active approach in handling that.
Is the company evaluating the acquisition of additional copper assets within Canada?
Potentially, yes. However, we are very much focused on executing on McIlvenna Bay first. We just don't want to bite off more than we can chew for now. However, that is something we'll definitely look at later as we look to scale up.
There was a follow-up to that. If you are looking at things, might the focus be on additional opportunities in Saskatchewan or looking at other provinces? And also, would the company consider copper porphyry assets should the right opportunity present itself, or VMS only? However you want to answer that.
Yeah, so look, Saskatchewan is obviously our home. We've built up a great relationship with all the people there, from government, from organizations like SRC, MOE, all of that, and the First Nations people are fantastic there. So we have great relationships in Saskatchewan and would love to grow there, because I think it is a province that is going to really put itself on the global map in terms of mining. But we are not limiting ourselves to Saskatchewan. We would grow in other provinces within Canada. And yes, for other projects, no, we're not limited to VMS. I should clarify that Big Stone is looking much more like an IOCG deposit rather than part of a VMS system. So Hampton Lake District is VMS, but or VHMS is the correct word from our geoscientist. Yeah, so we would look at a porphyry. However, it would depend if we could do it in a low carbon intensive manner.
How deep again is McIlvenna Bay?
Starts from 30 meters below surface and it just continues.
And could you dive in a little bit more about your relations with the First Nations, and who are they actually?
Sure. So the main nation that we deal with and partner with is the Peter Ballantyne Cree First Nation. Just exceptionally good people, exceptionally commercial, and exceptionally, motivated to advance their nation and advance, the northern part of Saskatchewan. So we're very much aligned. So yeah, we're very just very lucky.
Okay. How much of OpEx, operating expenditure, consists of salaries?
G&A.
Yeah.
For the company this year, it would probably be around 2.5 million maximum. As I said, I don't take a cash salary, so it lowers it quite a fair bit.
Does your flow sheet allow for the recovery of all the metals, gold, silver, zinc, copper, or is final recovery being carried out elsewhere?
No, so you recover gold and silver to your copper concentrate, and then the zinc concentrate is all on its own. The recoveries are quite high. For example, your gold recovery is 88%. Your zinc, your silver recovery is quite low. That's in the 60s right now. So we are looking to improve that in an updated flow sheet for our BFS. But yeah, then the concentrates will be sent to a smelter where they'll be further refined.
Have you planned for tailings management?
Yes, indeed. We are using a dry stack tailings, so it's the safest method out there. And we'll be using dry stack tailings with hemp utilized in that. The reason why we'll be putting the hemp in the dry stack tailings is that it acts as a bioaccumulator for heavy metals and high toxic metals. Then what we're looking at is a process where you will then burn the hemp down into what's called a biochar, which acts as a super fertilizer, and then utilize that within agri and farmland in nearby facilities. So sort of bringing the whole concept into a more circular economy is how we think about it.
Always get this question, however you want to answer it. Might be premature. When can we expect to see first production? So,
we hope in Q1 2024 to be in commercial production.
Okay, so shoot for that. Is the Quebec-based Glencore Consulting subsidiary running the BFA?
No.
Noront has recently been acquired by BHP. Can you comment on if any major has approached Foran?
I cannot comment on that specifically.
Yeah. Deepest drill hole? Question.
The deepest we've gone in McIlvenna Bay is around 980 meters, or I think just further actually, just past 1,000. And yeah, still intercepting mineralization, so still open.
Good. I'm going to pass it over to Stuart, and we'll please feel free to send questions later, and I'll get back to them after Stu and Adam get through to you. Okay.
Yeah, thanks for the presentation, Dan.
Thanks.
I kind of want to discuss about how your experience at Glencore is going to be very value add for, Foran, and particularly your work with the smelters, knowing what tricks they can do when you're looking at concentrates and offtakes.
Yeah,
yeah. So yeah, if you can talk about that.
Sure. I think it's a very good point, Stu, because let's say like in base metals concentrate, it's probably the most opaque commodity of all the commodities today in terms of the trade flow, which is great for commodity traders and marketers because you can make a lot of money, given the opaqueness. But I'm going to be making sure that we extract the maximum value for Foran in that sense. And I know the value of these concentrates. They will be premium concentrates just for how clean they are, for how low the silica is in the zinc concentrate, for the things like the iron oxide silica ratio and the copper concentrate, how smelters really value these things. And I guess the best example I can give would be, you look at a company like Champion Iron Ore in Canada as well now. And you see what they do, because they've got a high grade product. The market in their last quarterly results, I think for iron ore was trading around 180 or something like that, and they're selling theirs at 220. So that's, and I just use that as a comparable because that's similar to what we will try to do here in terms of extracting the value for the premium concentrate, understanding how smelters work.
Yeah, thanks for that. And then how, like, if there was no hydropower available for you guys, how would have that impacted you in terms of capex and opex, do you think?
So I think, look, the hydro is extremely cheap. So your alternative would be a diesel generator. Now that wouldn't really impact your capex significantly, but your opex, your cost of power would probably go from around 6 cents Canadian per kilowatt hour to 7.5 cents per kilowatt hour in that sense. So
yeah, okay, that's good. And the regional exploration program, how what's the budget for that, and how many meters are you planning on drilling to test some of these regional targets?
Yeah, so we've got about 25,000 meters planned for the second half of this year for the regional program. Now, whether we'll hit all of them or do more is all subject to performance from the initial holes, because how we run the geoscience team is actually it's a dynamic sort of model. And what I mean by that is that the guys will test a hole. If it doesn't yield the expected results, then they take a step back, they review, and then they have to make a business case to continue drilling there, or if to go somewhere else. So it's we quantify everything because it's all allocation of capital at the end of the day. So we want to make sure we allocate the capital as efficiently as possible.
Got it. And getting Fairfax on board is a big rubber stamp from a blue chip name. What type of due diligence did they do before making the investment decision?
Yeah, so they wanted to spend a lot of time with so the management team, understanding sort of our vision, how we run the business, philosophy, all of that, and then they looked at the project significantly. But for them, it was a fairly quick decision, I would say. Once they'd done their work, we moved to negotiating a deal quite quickly. People say about Prem Watts, the only thing he's better at than investing is being a human being. So when you're dealing with someone like that who's just sort of so fair and friendly, it was very very nice discussion and very quick.
Right, good to hear. I'll pass it on to Adam.
Thanks, Stu.
Great. Thanks, Stu. A question for you, Dan. Can you just talk to the royalties and smelter penalties? I believe that were outlined in the previous PFS.
Yeah, sure. So I think since the additional sort of met test work and log cycle test have been done, I don't assume or expect any of the penalties to trigger on the concentrate. So it's very very clean concentrate, so premium quality. So that will improve your economics significantly. And then on the royalties, there is two royalties on it. There's an NSR royalty that was previously owned by BHP Copper-Zinc. That is a 1% royalty on part of the project. Now we have a buyback option on that royalty at any point in time. So we will buy that back before we start production. It's $1 million. So not a big check, but yes, we will buy that one back for sure. Then there is another royalty of 75 cents per ton of ore on part of the property. We only get to that section of the mine. I can't remember in the latest mine plan what year it would be, but it's in a couple of years, but it's really not significant. But yeah, we still model it out as it will be a cost.
Okay. And can you, I don't have off the top of my head any idea of the state's sorry, the provincial royalties and mining taxes?
Oh, yeah, there's no sort of mining tax or anything like that in Saskatchewan. It's you know, just a provincial tax and federal tax system there, and all in on that, it's looking at around 27% for Canada for a company. We are obviously eligible for a number of things, given the stuff like sort of tax incentives and tax credits, given what we do on carbon neutrality and the investments we're making in the province. But that's still largely a work in progress, as the government has just changed a few things there. So yeah, we'll detail that better in the BFS as we work through it now.
I thought most of the provinces had some sort of mining tax or royalty, but not Saskatchewan.
No.
And can you talk to the mining method and the process flow sheet, and as far as cost per ton numbers and how they might change from the pre-feasibility?
Yeah, sure. So my method is going to be long hole stoping. I would say one of the big changes you'll probably see from PFS to BFS is because of the success that we've had at the drill program this year, both on the infill side as well as the expansionary side towards the up dip section of the mine. You've increased your tons per vertical meter significantly, so it makes your mining much more efficient. Now we are actually working through the final stages of the mine plan right now. And I can't give an exact number on how the costs will differ from the PFS as yet. Processing wise, we are assessing some changes to the circuit, and unfortunately cannot give the cost of differential there yet either. So apologies for that, but I should have all of that in the next sort of 3 months. So we'll be able to detail that much more for you.
Is it fair that maybe some of the processing charges might go up as you guys change the system to ensure that there's not that there's no little bit of copper in the zinc con, and there's no little bit of zinc in the copper con to avoid those penalties?
No, I think that like we've optimized the circuit there quite well. So I'm not too worried. The market for concentrates, again, for these ones would likely not attract any penalties given the premium nature of them. But I'd say from the processing circuit, in terms of your reagent and things like that, and float, if you're going to put additional float cells, you might increase your cost probably 10% or 20% at a maximum. But at the same time, we are looking at ways to reduce the upfront capex out of it. So we're doing the trade-off studies now between capex, opex. So that's why we've got the work undergoing right now. So sorry, I can't answer the question fully.
You guys are looking at more float cells in order to get higher recovery levels?
Yeah, just for some of the back end for the precious into the copper con later.
I wanted to ask, from what you were talking about, it sounds to me like you guys are going to go with an all-electric underground fleet, and I assume connect to the grid to take advantage of low hydropower costs. Is that different from the PFS, and what is that going to do to the capex versus the prior PFS?
Yeah, that is not different to the PFS. So what is going to be different from the PFS is that you're going to, instead of doing a vertical conveyor, we'll be doing an electric skip and hoist system. So that will change your capex there, which will actually make it more efficient. But it will also reduce the amount of trucks you need, because you'll have an ore pass system underground. So you'll be trucking less ore up to surface, and it'll all be up from the hoist.
Mhm. And you are going all electric underground vehicles?
Yeah.
And did the previous plan, I don't remember how close you guys are to the electric line. Was it already planned to connect to the grid?
Yeah, it was already planned. But in the previous PFS, they weren't assuming electric vehicles.
They were not, right?
No, it was all diesel.
So what isn't there a marginal increase in cost from internal combustion to the electric vehicles for those vehicles?
I'd say your increase in cost on the vehicle side will be between 0 and 10%, depending on the truck in terms of upfront cost. However, your OPEX will go down further from that, because as I was sort of saying in the beginning, they're more productive. So because they're more productive, less maintenance hour, therefore unit costs go down. But your overall energy requirements will probably increase by another megawatt to 2 megawatts on average.
Yeah, it was my understanding that underground electric vehicles, while they certainly have lower OPEX, much more productive, but the CapEx was significantly more than what you're talking about. Granted, it's worth it, but 0 to 10% sounds very low to me for an incremental increase to go to electric vehicles.
Yeah. No, exactly. And that was definitely the case, I'd say, a year ago. But the way the world's changing and how technology is moving, and the amount of other mining companies that are, you talk to most mining companies today, or better, talk to like the Epirocks and Sandviks and Caterpillars of the world, and they will tell you that mining companies are only asking for electric today because, you know, number one, they see it's more economical because it works better. But number two, you know, they're getting a lot of pressure from their jurisdictions and wherever they operate to reduce emissions. So that's why they've sort of the prices become more competitive. It's like a Tesla, you know, when Teslas first came out, they were expensive, and now as they refine the process, they, you know, become more cheaper.
Are you guys also working in reduced ventilation since you're going with all electric vehicles?
Yeah, exactly. And you know, as I'm sure you know well, for an underground mine, ventilation is one of the biggest OPEX items. So for us, by using an electric skip and hoist system, reducing the amount of vehicles, and then using electric vehicles, you know, will optimize your vent system significantly.
Are the capture of the precious metals into the copper con? What is there going to be significant change to that with the new PFS?
Hopefully your recoveries will increase more on your silver.
Overall, or recoveries to the copper con?
Well, yeah, they all go to your copper con already. So that's good. And then overall, yes, your overall recovery rate will go up.
Okay. Okay, I think I hit all of my questions. Let me pass it back to Campbell for additional questions from the audience.
Thanks, Adam. I have a few more and then we'll close. They're sort of out of the box question. Did you look at nuclear energy?
It's not that out of the box. You know, I'm actually a big believer in nuclear. I think it's one of the cleanest forms of energy going about. And you know, being in Saskatchewan, where some of the best uranium deposits are in the world, we have looked at SMRs and VSMRs as well, because you know we will expand the camp and look to help grow an energy business as well, a clean energy business.
Would not sorting enable you to improve the recovery of the gold and silver by allowing you to treat each ore source individually?
Ore sorting, is that what the question was?
Yes. Would that be better for recoveries?
So far, the test work is very positive on ore sorting. That is something that we would love to include in the BFS. However, we won't have the full test work completed by then, so we'll be including that as under an opportunity section in the BFS. But yes, it's a very good question, and it is something that we are actively doing. And so far, the test work has been very positive. So the mineralogy is amenable to ore sorting.
Vertical conveyors usually encounter spillage. How much spillage is encountered from a vehicle hoist system?
A vehicle. I don't understand the question properly, but I think that individual probably sent their question before Adam asked a good question when he was asking them, and where I said that one of the changes from PFS
vertical hoist system.
Yeah, so we're not using a vertical conveyor anymore because the resource has just grown too much and it doesn't make sense to do a vertical conveyor. And that's why we're doing a skip and hoist system, like a shaft.
Got it. And then any concerns about the source of the batteries of the electric vehicles?
No.
No, okay. Great. What would you do if commodity prices started going south? Would at some point would you be less green, or what? And you were going to go to cheaper production?
Well, it's a good question. We've got a fair bit of time because we're only going to probably be in production end end Q4 2023, Q1 2024. Now, because of I got a background in commodity markets as a trader, as well as being involved in iron and smelters. We do have a combined and a more holistic approach. So should we have a view on the market going down or something like that, then we will act. However, for the time being, we are actually incredibly bullish on commodities, particularly copper.
Okay. Want to thank everyone for tuning in and for your great questions. And please share your feedback when you log out. And this event will be available in replay on demand in about an hour at amvestcapital.com/replays. Very simple. So I'll pass it back to you, Dan, to close the session. Thank you.
No worries. Well, again, guys, I just want to say thank you very much. I really appreciate the interactive discussion. Actually, it's really enjoyable, and I hope everyone enjoyed it. And if there's any further follow-up questions, please reach out to us directly. All our contact details on the website. It's a very exciting time for the company, so we appreciate all the support, and yeah, looking forward to continuing dialogues together.
Thank you, sir. Good day, everyone.
Thank you.
Thanks, guys. Bye.